When you have a medical emergency, you go to a doctor. When you have a problem with your teeth, you go to a dentist. And when you need financial advice, you go to an investment advisor. I'm at an event being organized by the Association for Registered Investment Advisors, and I'm in conversation with 3 of the over 200 that are here today. Thanks so much, gentlemen, for taking the time. And y'all are all from different places. You're from Pune, you're from Ahmedabad, and you're from Chandigarh. So I think a very diverse set, and you deal with a diverse set of individuals as well. What, according to you, and I'll start with you, what, according to you, is the toughest aspect of advice and dealing with people's money?
I think the toughest part is making people act. Advice is still simple, but making people act is difficult. It's like a doctor prescribing medicines and the patient is not taking, after a few days he feels good, and then the 4th day he stops taking the medicine. That is what the major problem is.
Okay, so I'm going to take this very question forward, and I'm going to ask, if the medicine is not taken, then how do you try to fix that?
We try to advise them and guide them in the best possible manner. And if they cannot do it on their own, we try to initiate the transactions and we can ask them to just approve it. So in that case, we try to educate them and make sure that they actually follow it. Because advice itself is, everyone give the advice, but execution is most important. Advice pe kaam karna is very important hota hai. So that's why we try to make sure that the client actually performs on the advice, and then he gets the benefit of the advice that he has.
Okay. Now, I want to specifically ask you about the outside of the metro cities, because you operate from Chandigarh. You're the only registered investment advisor in Chandigarh, but you don't have a lot of clients in Chandigarh. Do you think that it will take a little while for people in the tier 2 towns, in the smaller cities, in the smaller regions in India to start seeing the benefits of dealing with an investment advisor?
Well, definitely, yes. See, first of all, the awareness level of financial planning and registered investment advice is quite low in these kind of areas. And when they are not very much comfortable with the financial planning as a process, how would they think of SEBI registered investment advisors who can help them get into that kind of process in a very better manner and in a regulated manner? So these kind of challenges are no doubt there, because small towns people are more comfortable with real estate. Small towns, they are not much aware, because they don't think that they can get such kind of services over there in their own city. They don't. They look at the metros, the advisors available in metros. They look upon them. And plus the social media comes to their rescue. But all these things, it doesn't rescue them, but it creates a lot of noise around them, which automatically distracts them for the betterment, and they kind of, they take another direction which they should not.
Okay. Now, just a couple of other questions from the perspective of expectations. And I think a lot of what you guys do is to manage expectations of the people that you speak to. I'm sure a lot of people will be speaking to you about the returns that they get in the investment advice that you provide. How do you counsel them when they come back and say, hey, you know what, my neighbor is earning more? Yeah. Do you have to deal with that?
Of course, few times, even after counseling at the first meeting and making them understand that returns are not everything, and what is more important is achieving the goal. Still then there could be some conversations wherein a client is fixated over why the returns are lower. The simple thing that I explain to them is that you don't know what is the risk that they have taken in the portfolio. You don't know for what they are saving. You don't know how much they have saved, and you have not seen the returns in actual, right? A lot of people, in financial terms, they try to boast their returns and they will not tell you about their failure. So that's the thing which I try and explain to the clients. And most of the times the clients understand till the time they are seeing that they are progressing towards their financial goal.
Now, my last question, gentlemen, and I think I'll ask both of you this, is that generally, even when we speak to investment advisors, usually the advice is to buy as low as you possibly can and hold for the long term, especially when you're talking about equity, because this is meant to achieve your financial goals over the long term. But at the same time, when to sell is equally important, because when you have a large investment portfolio, you may lose opportunities by not selling. How do you adjust that aspect?
There are two parts of it. One is when there is a goal which is becoming due. So you invest based on the goal planning. So if there is a goal which is 10 years later, then you invest in equity. And if the goal which is due in, let's say, next month or 1 year, then you invest in bonds or even in bank FDs. Now, so that is for the asset allocation. But when you sell, I think the most important thing is there is a need for tactical allocation as well. So when there is an interest rates going high, which is the current state right now, so it is always prudent to reduce the equity allocation and invest in debt funds or bonds. So you can have, because the risk adjusted return is more important than the return itself, where everyone wants to take the highest possible return, but they don't want the consideration the risk part of it. Now I think it is time to reduce the risk of investing in equity, and the tactical allocation has to be done that's a prudent advice, I would say, for managing the client's portfolio and their allocations and expectations.
So taking money off the table in a tactical manner is also important. What do you think?
See, I think financial planning process itself takes care of when to sell, but we have to be very clear on why to sell. So, see, process itself says that you have to achieve goals, and goal has to be achieved through a process, through asset allocation, through risk profiling, and asset allocation itself takes care when to sell, what to sell. Sure. And whenever you rebalance the asset allocation, then you weed out the not performing or not fitting into the portfolio investments out of it. Right, then, and when you're near to the goals, then you in any case has to rebalance the things before 3 years, come out of equity and have some staggering approach so that you can achieve your goals comfortably and use the money whenever required. So we never prefer these kind of when to sell or the right time to sell kind of thing. So it's all process based, and financial planning takes care of that.